It's fair to say that the bargaining power of those bricks and mortar retailers that are still keen to have a store-based portfolio has improved significantly this year. We've seen, and again, that's building on trends that have been there for a couple of years. We've seen companies like Next, successful in bricks and mortar and indeed online, having a really strong negotiating power with their landlords and getting 30% plus reductions on rent on renewal. That certainly is something that we would continue to expect to see, that downward pressure on rents. But as we've said, there's a whole bunch of different factors coming into this at the same time, and those downward pressures on rents are indeed probably offsetting, only in part at least, that margin dilution from increasing online competition.
And just going into the weeds a little bit more on the bricks and mortar, do we have to divide them into two camps as well, i.e. those that own their own retail estate and those that have already done things like sale and leaseback, which has been a common feature for many years? Does that change the dynamics on the two types of bricks and mortar?
I wouldn't say that's a material aspect of it. Most large retailers own pretty limited proportions of their estates these days. Even the largest, like Marks and Spencers and others, have a large leased portfolio. There's more flexibility when you own a store, perhaps to close it, but again, around the edges only as a benefit. What you will see, I'm sure, is continued evolution of store estates. People are looking to move away from high streets, perhaps more into the retail parks and destination locations where consumers are happy to go. Again, retail parks, I would say, has been a real success story this year, with social distancing benefiting, from that aspect.
David, can I just ask you, could you flag up some more of the trends you think are going to be critical for helping us decide who are the winners and losers in 2021? Is it going to be, as you and Steve were talking about, those who have the best position with regard to the property portfolio, or flexibility around the supply chain? I mean, give us a sense of best of breed and why.
Well, execution matters. You need to remain relevant to your customer base. And however you do that, whether it's through value, whether it's through convenience, whether it's through the brand, through the product, is vitally important. So, the big profile failures that we've seen this year, the Arcadias, the Debenhams of this world, they've been struggling for some years to maintain that engagement with their customers. And again, the online growth as a channel hasn't helped those type of players. They've been perhaps slow to react or frankly, unable to react to that dynamic. Others have been more successful. I've highlighted Next already, but even away from clothing, you're going to have companies that perhaps hadn't had an easy ride of things in segments like DIY, who are finding that customers are spending more time at home and re-engaging with that home environment, their gardens, etc., and potentially, have had a real great 2020 in relative terms, and that could continue if they can continue to engage strongly with their customers, giving them the type of service levels that they need and the value that they need. Value is a really important aspect, and the cues that we've seen on the news around the reopening of Primark, for example, it just shows you that people really want to get good value in their eyes. B&M, the general merchandiser, they've also had a very strong year, and they offer great value, excitement, if you will. And the interesting thing, I suppose, about both of those companies is that neither are really an online presence as such in terms of online sales, but they're managing to execute strongly, resonate with customers, and giving them what they want at a price that they feel is attractive.